Palantir Technologies' stock performance this year has been incredible. It's up 343% year to date and an astounding 935% over the past 2 years. This has even secured them a place in the NASDAQ 100. Is this meteoric rise something we can expect to continue?
While Palantir's recent performance is undeniably impressive, it's crucial to consider whether this trajectory is sustainable in the long term. Their unique position in the AI landscape as a data mining specialist has certainly contributed to their success. Their platforms Gotham and Foundry cater to distinct markets, government and enterprise respectively, and have garnered significant attention.
What makes Palantir's AI-driven data analysis platform stand out in such a competitive market?
The complexity and sophistication of these platforms make them exceptionally difficult to replicate. This irreplaceability factor gives Palantir a considerable competitive advantage. Consider Gotham, for instance. Its ability to process and analyze highly sensitive government data, particularly in areas like counterterrorism and intelligence analysis, is unmatched. It's not simply about crunching numbers, but uncovering hidden patterns and connections that would be impossible for human analysts to identify on their own.
Their strong financial standing also seems to bolster their position. A cash position of $4.6 billion with no debt provides a considerable cushion and flexibility.
Their robust financial position is indeed noteworthy. This not only allows them to consider strategic moves like share buybacks, but also provides stability, especially in a market as volatile as the tech sector. It's a clear sign of their financial prudence and strategic foresight.
However, their current price-to-sales ratio exceeding 69 raises concerns. Historically, such a high ratio is a red flag, often indicating an unsustainable valuation.
That's a valid concern. To understand the potential implications, we need to consider historical parallels. The dot-com bubble of the 1990s offers a stark reminder of what can happen when investor optimism outpaces realistic growth. Companies like Amazon and Cisco Systems, despite their innovative offerings, saw their valuations peak at 40 times, trailing 12-month sales before the bubble burst.
Trailing 12-month sales, for those unfamiliar, refers to a company's sales over the preceding 12 months. It's a metric often used to evaluate a company's performance over a recent period. This comparison to the dot-com era, while concerning, is just one data point. Could Palantir be headed for a similar plunge? Or are there factors that might mitigate such a drastic decline?
While historical trends provide valuable context, it's crucial to examine Palantir's specific circumstances. Their government contracts, particularly through Gotham, offer a degree of stability that could cushion a potential downturn. However, the key to their sustained growth hinges on founders' performance in the enterprise sector. This sector presents its own set of challenges, including competition from established players, and the complexities of scaling a software platform to meet diverse business needs.
Scaling and competition are certainly key hurdles for any company, especially in the ever-evolving tech landscape. What's the likelihood based on historical trends of other next big thing tech companies? The Palantir stock could experience a significant drop. Could we see a decline of 50% or more?
A decline of that magnitude is certainly within the realm of possibility, especially considering the historical precedent set by other tech companies that experienced rapid growth followed by substantial corrections. While Palantir's government contracts might provide some buffer, history suggests that a significant decline is a real possibility. We must remember that Wall Street operates on future expectations, and the current optimism surrounding Palantir may not endure if their growth doesn't meet these lofty expectations.
That's a sobering reminder of the inherent volatility of the tech sector. So while Palantir undoubtedly possesses great potential, particularly in their unique position within the AI landscape and their strong financial standing, a degree of caution is warranted.
Precisely. Enthusiasm for Palantir's potential should be tempered by an understanding of historical trends and the challenges they face in scaling their enterprise platform and navigating a competitive market. It's a complex interplay of factors that will ultimately determine their long-term trajectory. The regulatory landscape surrounding AI is another crucial factor to consider. Governments around the world are grappling with the implications of this rapidly evolving technology, particularly in sensitive areas like government and defense, which are key markets for Palantir.
What specific regulations could potentially impact Palantir's operations, and by extension, their future growth prospects?
Data privacy and the ethical use of AI are at the forefront of these regulatory discussions. The European Union's General Data Protection Regulation, or GDPR, sets a high standard for data protection and has far-reaching implications for any company operating globally. Similar regulations are emerging in other regions as well, reflecting a growing global concern about the responsible use of data and AI.
How could these regulations specifically impact Palantir's government contracts, which constitute a significant portion of their revenue? Could compliance with these regulations pose a financial or operational burden?
Compliance with regulations like GDPR can be complex and costly. It requires companies to implement robust data protection measures, ensure transparency in their data processing activities, and provide individuals with greater control over their personal information. Palantir may need to make significant adjustments to their platforms and practices to meet these evolving regulatory requirements, and these adjustments could impact their profitability.
Could these regulatory hurdles potentially limit Palantir's ability to operate in certain markets or expand their reach globally, particularly as they aim to grow Foundry's presence in the enterprise sector?
It's certainly a possibility. If Palantir is unable to demonstrate compliance with these regulations, they could face fines, penalties, or even restrictions on their operations in certain jurisdictions. This could hinder their ability to secure new contracts, particularly in markets with stringent data protection laws. Their expansion plans for Foundry could be significantly impacted if they cannot navigate this complex regulatory landscape effectively.
So regulatory compliance is not merely a checkbox exercise, but a strategic imperative for Palantir's long-term success. Failure to navigate this landscape effectively could have significant consequences for their growth trajectory, particularly as they aim to broaden their reach beyond government contracts and into the enterprise sector.
Absolutely. It's not just about compliance. It's about demonstrating a commitment to ethical and responsible AI development and deployment. Public perception matters, and companies operating in this space need to be proactive in addressing societal concerns and engaging in constructive dialogue with policymakers and stakeholders.
How can Palantir and other companies operating in the AI space proactively address these concerns and ensure that their technologies are being developed and used responsibly and transparently?
Transparency is crucial. Companies need to be open about how their AI systems work, what data they use, and how they mitigate potential biases. Engaging with policymakers and industry stakeholders to shape the development of ethical guidelines for AI is another important step. Implementing robust mechanisms for accountability and oversight is also essential to ensure that AI is being used in a manner that aligns with societal values.
So it's a multifaceted challenge that requires a holistic approach, balancing the pursuit of technological innovation with a deep understanding of its societal implications. Failure to strike this balance could undermine public trust and jeopardize the long-term viability of these technologies.
Precisely. Building and maintaining public trust is paramount. Companies need to be proactive in addressing ethical concerns, demonstrating a commitment to transparency, and engaging in open dialogue with stakeholders. This will be crucial for the sustainable development and adoption of AI technologies in the long run.
Beyond the regulatory and ethical considerations, we need to delve deeper into Palantir's financial performance and market position. They've shown impressive revenue growth and have achieved profitability, but their valuation, as we discussed earlier, remains a point of contention. That price-to-sales ratio exceeding 69 suggests that investors have high expectations for Palantir's future growth. But are these expectations grounded in reality?
That's the key question. Can Palantir sustain this level of growth and justify their current valuation? The answer hinges on several factors, including their ability to successfully scale Foundry, expand into new markets, and effectively navigate the competitive landscape.
Let's start with Foundry, which is widely viewed as Palantir's primary growth engine. What are the key challenges they face in scaling this platform to meet the evolving demands of the enterprise sector?
Scaling any software platform, particularly one as complex and sophisticated as Foundry, presents a unique set of challenges. It requires significant investments in infrastructure, research and development, sales and marketing, and customer support. Palantir will need to execute flawlessly on multiple fronts to meet the growing demand for their enterprise solutions.
Beyond the technical challenges of scaling a platform like Foundry, what are the key strategic considerations for Palantir as they aim to expand their footprint in the enterprise sector? What will be crucial for them to demonstrate to potential clients in this market?
Demonstrating a clear return on investment for their enterprise customers will be crucial. Companies are looking for tangible results, and Palantir will need to showcase how Foundry can help them optimize their operations, improve decision-making, and ultimately enhance their bottom line. It's not enough to have a cutting-edge technology. You need to prove its value proposition in a way that resonates with business leaders.
And they're not operating in a vacuum. The enterprise software market is highly competitive, with established players like Microsoft and Salesforce already holding significant market share. How can Palantir differentiate themselves in such a crowded landscape and convince businesses to choose Foundry over the competition?
Palantir's unique selling proposition lies in their deep expertise in AI and data analysis, their proven track record in handling complex and sensitive data, and their experience working with government agencies, which instills a sense of trust and security. These are valuable assets that they can leverage to differentiate themselves in the enterprise market.
So while the challenges are undeniable, Palantir does possess certain strengths that could give them a competitive edge. Their success will depend on their ability to effectively communicate these strengths to potential clients and demonstrate how Foundry can deliver tangible value in a way that resonates with their specific business needs.
Absolutely. They need to articulate a clear value proposition, highlighting how their unique capabilities can address the specific pain points and challenges faced by businesses in different sectors.
Beyond scaling Foundry and competing effectively in the enterprise market, expanding into new markets is another crucial aspect of Palantir's growth strategy. Their current focus is primarily on the U.S. government and its allies. What are the key considerations as they aim to broaden their reach geographically and sectorally?
Expanding into new markets, particularly internationally, requires a deep understanding of the local context. Different markets have different regulations, cultural norms, and business practices. Palantir will need to adapt their approach, tailor their solutions to meet the specific needs of each market, and build relationships with local partners and stakeholders.
It's a complex undertaking. That requires more than just replicating their existing model. They need to demonstrate a willingness to adapt, learn, and engage with new markets on their own terms. This requires a nuanced understanding of the cultural and regulatory landscape of each region they target.
Precisely. A cookie-cutter approach is unlikely to succeed in a global market as diverse and dynamic as the one Palantir is aiming to penetrate. They need to demonstrate cultural sensitivity, a deep understanding of local regulations, and a willingness to build partnerships and trust within each new market they enter.
We have explored the various facets of Palantir's business, their technological prowess, their financial standing, the regulatory landscape they navigate, and the competitive market they operate in. As we synthesize these insights, what key factors should investors and those interested in Palantir's trajectory pay close attention to?
The interplay of these factors will ultimately determine Palantir's long-term success. Their ability to scale Foundry effectively, expand their market reach strategically, and maintain their technological edge in a rapidly evolving AI landscape will be critical.
Let's delve deeper into their technological edge. AI is central to both Gotham and Foundry. It's the engine that drives their data analysis capabilities. How can they ensure they remain at the forefront of this rapidly evolving field?
Continuous innovation is paramount in the AI industry. Palantir needs to invest heavily in research and development, attract and retain top talent in the field, and foster a culture of innovation that allows them to anticipate and adapt to the ever-changing AI landscape.
Staying ahead of the curve in AI is crucial, not just for maintaining their competitive advantage, but also for ensuring their platforms remain relevant and effective. Falling behind in this domain could render their solutions obsolete, jeopardizing their market position.
Precisely. Complacency is not an option in a field as dynamic as AI. They need to be constantly pushing the boundaries, exploring new approaches, and refining their algorithms to ensure they remain at the cutting edge. This requires a significant and sustained investment in research and development.
This brings us back to their valuation. With such a high price-to-sales ratio, the market clearly expects significant growth. Can Palantir realistically meet these expectations, or are we witnessing an unsustainable bubble?
It's a delicate balance. While their current valuation reflects the market's optimism about their future potential, their ability to deliver sustained growth and profitability will be crucial in justifying this valuation. Their performance in the coming quarters and years will be closely scrutinized as investors assess whether they can live up to these lofty expectations.
So while Palantir's trajectory is promising, it's not without its challenges. Their future hinges on their ability to execute on multiple fronts: scaling Foundry, expanding into new markets, navigating the regulatory landscape, maintaining their technological edge, and ultimately delivering on the market's high expectations. It's a complex equation with many variables.
It's a fascinating case study in the dynamics of innovation, disruption, and market expectations. Their journey reflects the inherent complexities of operating in a rapidly evolving technological landscape and the high stakes involved.
We've covered a wide range of topics, examining Palantir's strengths, their challenges, and the factors that will ultimately shape their future. We hope this has provided you with a comprehensive and nuanced perspective on this intriguing company.
It has been a pleasure sharing my insights with you.